It's a Jewish holiday today, Rosh Hashanah. Not necessarily a lot of volume, but it does seem to be more of a defensive tone in the market.
Somewhat, yeah. A little bit of a mild bounce. I have a feeling it was looking like it was going to be a better open, but the tech stocks didn't really run. Apple held us back. And yeah, you mentioned defensive tone. It's been a pattern. It's been unusual because you have very strong U.S. economic data, and yet housing, autos, to a lesser degree industrials and semiconductors have kind of pulled back more than the overall market. Kind of keep grinding ahead. I think the uptrend is intact, but it really doesn't have a lot of energy behind it after this last 2-week pullback.
But those sectors, Mike, that have pulled back kind of justifiably, given some negative headlines again on China. And when you consider last week how much the NASDAQ underperformed, kind of encouraging today not to see that kind of proliferate and get worse.
Yeah, there's no doubt there's not a lot of real heavy downside momentum either. I really think the market is just kind of consolidating after this run from late June to late August. You essentially had an 8% run to a record high, and now we're kind of churning around a little bit below that. So I wouldn't really say it raises any alarms, but it is striking that essentially you do have a more mixed and selective tape than we've had in prior times when you had this ripping rally.
Kourtney, what are you watching right now? And we've got inflation data later on in the week. We just had that strong enough jobs report, I should say.
Yeah.
Yep. We got midterm elections coming up. What do you see as sort of the risks for the market, or I guess maybe the next kind of big movers for the market?
Well, you know what's interesting, Mike, I totally agree with you. It's very interesting, the defensive stance that we're seeing right now. I think you're going to see kind of a nice mixed bag, if you will, of growth, though. You're going to see some folks that are taking some money off the table, getting a bit defensive, but at the same time, you're going to see folks that are opportunistic. We were talking about financials and kind of Goldman kind of being down today, but just as much as Goldman's down, a KKR is up. As much as, a Morgan Stanley or some of the other big names that you see in financials are down, you can find one that's up. So I think you're going to see the stock pickers really come out here, and those that really want to get in where you get some of this pullback, they're going to get in and they're going to be in for the long term.
Michael, there was some negative headlines over the last couple of days about trade and as it relates to China. There was also some encouraging tones as it relates to the European Union. How do you net that off, and do you think the market is successfully pricing in the trade risks at the moment?
I don't think the market is successfully pricing in trade risks right now, because I think the market or market participants still in the end believe that China and the United States are going to come to an agreement. Yes, there's some positive news out of Europe, but I think that the potential for problems related to trade with China still remain. With that being said, I, like the market, believe it is going to be resolved. I think there's too much at stake for both countries. And I think in particular, China really doesn't want to be in a position where they impact their GDP growth any more than it's already been impacted. So I think you're going to see some sort of resolution. I don't think it's priced in quite yet if it doesn't play out positively, but I do think there'll be a resolution.